Often imitated, never duplicated. It's the Real Money Show. My name is Jeremy Wiseman, Vice President of Guildhall Wealth. Joining me today is Jerry Correa, Senior Broker here at Guildhall. How you doing, Jerry?
Feeling good, Jeremy. It's Friday, and very excited week.
It's been a very exciting week. A lot has been happening in terms of we've got the Silver Squeeze 2.0 coming up. If you're listening right now, we record the show on Fridays, and of course it airs on Saturdays and Sundays. So we do have the Silver Squeeze coming up. I believe it's would be on the 1st of May over the weekend. So we'll see what happens. We want to talk about that later in the show. We're also going to be talking about what is happening in the commodities sector. Lots of price movement over there. We also have to take a look at some debt, and of course how the economy is going to be handled going forward. Let's start with the debt. I just showed you, Jerry, before we jumped on air, this chart where it shows that the Trudeau government between 2015 and 2022, what they're planning to spend is about $662 billion is what they've spent so far. And the combined debt of all Canadian prime ministers since 1867 is $630 billion. So the Trudeau government has already outspent the entire history of Canada. What is your initial thought when you hear something like that?
It's shocking. Not surprising. It is shocking to know that we have gone this far so quickly, and it's just exacerbating. The Bank of Canada last week spoke, and they actually cited that, the economy is doing okay. We're reopening. We're going to tighten a bit. As we noted before, the Bank of Canada was printing $4 billion a week, and they've tightened it to $3 billion a week. Really, again, just an astronomical figure, just thinking about how many Canadians are in the workforce. We only have 33 million people in Canada, so where is the economic power? Where is the GDP coming? Who's going to deal with this debt, and how?
And also, you think about it, you say, okay, all of this money printing is skewing reality. How much of that is being thrown into major corporations so it looks like the economy is doing great? I talk to people all the time. They say, I'm not sure how the economy is doing so great and how the stock market's rising when I drive down the street and there's nothing but closed businesses.
It's nothing for us. It's nothing for the medium class. We're getting squeezed out. The rich are getting richer. The banks are getting their bonuses, and that's the way it is. And they'll continue this charade as long as the Canadian and the global population start to wake up, and they are waking up. And this is the silver squeeze that we're talking about week over week. We want an end to this charade, this fraud that's happening from the top down, and silver is the Achilles heel to do that.
There is a cost to all of this debt. I mean, whether it is they're going to raise taxes to pay for it, or whether the money runs out at some point and people who are getting all of these loans no longer get those, and you have to deal with the fallout of that. And then as well, you have this lack of actual tax revenue coming in. The tax revenue can't be enough to cover all of these debts. You've got the debt to GDP well past 100 debt to GDP, so you can't grow yourself out of it. So the answer is not just print more money. Like at some point the rubber hits the road and you say, okay, we're in real trouble. We either try to inflate this away or we try austerity, raise taxes, etc. So let's talk about, raising taxes, that's obvious. Let's talk about the more insidious one, which is inflation. Now, I don't know about you, but people are talking about inflation. Everyday people are now saying, look, I just did my budget for the month and it's up. Mm-hmm. I didn't think my kids ate that much, but apparently they're not eating anymore. It's the fact that the prices are up. And so people are really seeing inflation. I think it's one of the #1 Google searches these days. So it's now apparent, it's now obvious, and we have to take a look at the real rate of return. What is the real rate of return? If the government says inflation is at 2% and they want to jawbone and tell us that it's transitory or whatever they want to say, that inflation is not actually happening. But then we look at our real lives, we go, no, it actually is happening. And the rate is way, way higher than 2%. So if I'm leaving my money in the bank at less than 1%, I'm losing. That's how the government is going to pay back that debt. If they stop producing more debt, that's assuming that they don't continue to balloon the debt, right? But if they keep the debt as is, that's how they're going to get rid of it. They're going to just basically tax you through inflation. And if you're getting 3-4% on your money, fantastic, except that real inflation rates, real world rate is probably closer to 5 or 6, and so then again you're still negative 1 or 2%. Plus you're now paying capital gains on that. So on the meager gains you have been getting. So I just don't see where people are going to figure out how to balk this situation, get out of this situation.
Getting out of the situation is the key here. And how do we do that when you have, people receiving these stimulus checks or, checks to stay at home and not work? There is zero incentive to go back to work, to get into the workforce. So it's an equation that doesn't really add up for a bright future. The only way is to understand what's going on with the money supply. What is this inflation? And what does it lead to? A total depreciation and a devaluation of your currency is what is at hand. How do we protect against this erosion of purchasing power year over year? The only way is to get into a non-correlated asset class to the US dollars and the stock market. And that is historically physical gold and silver. We're not talking about ETFs or shares or any type of derivative or proxy for physical precious metals. Those don't count. It's all about the physical.
And the physical gold and silver have both averaged 11% a year for the last 15, 20 years. Silver's now, I believe we're around neutral on the year. Gold has retreated based on its highs of last year. We're still a little bit under on gold right now, but then look at what's happening in the other commodities. Lumber's up 300%. Copper's up over 100%. Food inflation is there. You've got inflation happening left, right, and center, and the commodities sector is going gangbusters. Prices are going through the roof, and you still have this ability to buy gold and silver at these undervalued levels, even with a higher premium. It's incredibly cheap. I mean, imagine what would happen if gold went even closer. Let's say the Dow gold ratio dropped in half, right? It's right now, I think it's at like 14, 15 to 1. What if it went down to, if the Dow's trading at 30,000 points and gold went to 4 to 1, you're probably looking at still $7,000 an ounce on gold.
Yeah.
Even with a higher premium, think about the gains. And it's going to go there.
It will.
It's just laid out of the gate. Why do you think it's laid out of the gate?
How the world views gold and silver. Gold and silver are precious metals. Yes, they offer industrial attributes, just like the commodities sectors have already taken off. That's what we call the canary in the coal mine. Remember, precious metals, the word precious connotates that they're monetary metals. Gold and silver to us and globally are money. And because you have entities and institutions and bullion banks who have started to distort prices through derivatives and proxies to short for gains, they're not only making their money, but they're trying to dissuade our attention from what real money is, which should be scarce. So this is really a paper versus physical war, and which side wins. Fiat currency have they're finite. Fiat currencies, which is a Latin term for let it be so. By government decree, we're going to say this has value because we say so. No, it does not have value. Gold and silver have value. They have intrinsic value. They have weights and measures. It's balanced. And, when you have that demand for commodities, then you have a demand for real money. And that's what people want, the real money.
The number 18778-SILVER, the website guildhallwealth.com, and some of the ways that you can get involved in the market, Jerry, would be just to acquire the product directly. Go to Guildhall's e-store, guildhallpreciousmetals.com, pick up some, maybe a tube of silver maples. There's 25 ounces in a tube, some 10-ounce bars, and then maybe once you get a comfort level of what it means to actually own real money in your hand, where all of a sudden the value of your worth, right? When you go out and you get money, right? You put out your value and you get back a paycheck and you put it into gold and silver and it stays there. It doesn't dwindle over time due to inflation. And in fact, it grows, right? If you're getting 11% a year on gold, that means it's growing. That's a great place to be protecting and growing wealth over the long term. And yet they still persist in being undervalued right now, even though they've performed quite well. But that's a great way to get started, is just picking up some physical metal, getting it in your hand. You don't have to commit to, putting 50% of your net worth in, or even 15% of your net worth. But do you think that that's a good place to start? People should just think, get a little bit in your hand.
It's physical. And whichever option you decide to go with, whatever's comfortable with you. We're not here to push you, but get something in your hand indeed. But we're not doing ETFs. We're not doing certificates. We don't do any derivatives or proxies. You get the real thing in your hands, and then we begin from there.
And, of course, you don't see central banks buying certificates or ETFs. They actually buy the real thing. So you have to consider, on the one hand, they're jawboning, saying, there's no inflation. On the other hand, they're buying gold, at least other central banks around the world. So let's get into that. Let's also keep on the topic of these commodities, because I think it's important for listeners to understand exactly how undervalued gold and silver are and what type of money is going to be made, and to have the patience to stick through that, to not just protect your wealth, but to grow your wealth. And then, of course, we're going to get into the Silver Squeeze 2.0. Will it work? The number 1-877-8-SILVER, the website guildhallwealth.com. This is the Real Money Show on Global News Radio, 640 Toronto. The number 1-877-8-SILVER and the website guildhallwealth.com. We're talking about real money, because real money should be a store of value. And that's what we've been seeing in the gold and silver market for decades. And it continues to do so, even though, and this is the key, it's actually still undervalued. And so there's a potential there for much, much bigger gains, not just protecting wealth, but growing your wealth as well. And I think one of the issues that maybe gold and silver are having in some cases on a level, Jerry, is that we are living through a time where there is instant gratification. And that usually happens at the top of markets, where there's, people are very excited about the stock market. It seems you can't lose. Although we seem to have a lot of people coming over where they're saying, I've been in these mutual funds for years, and the only person who seems to be making money is the broker. So I need to start making a change, and I've been wanting to get into the metals, and let's put a little bit into gold and silver using this portfolio. That being said, I digress. How do you feel, and how do you talk to people who they need to see gold and silver as a long-term play, as part of their portfolio long term, but they can't stop thinking about the speculative side of things and making money? That money should be coming much, much quicker than that.
I think what I try to do is lay a common denominator with everyone. I think it's very important that, yes, we want some gratification today, but it's much more important to worry about our tomorrows and generational wealth. There is a great proverb that I live by: a good person leaves an inheritance for his children's children. We fail to plan for the future, even beyond our lives. Countless people not even putting away anything for a rainy day, looking for today, quick flip mentality. It's a mentality that has shifted, and this mentality is being fed to us with these universal basic income checks, day to day, check by check by check. Nothing about tomorrow. So once we come into that agreement that, you know what, Jerry, you're right, I never had this conversation before. How do I do this? Well, gold and silver historically have never gone to zero. Historically have been money, been regarded as money. They're scarce, because real money is scarce. Real money is recognizable. It's intrinsic, and it's relevant today, much more than ever before. So it's a very exciting time to discover with the person why this is a great opportunity, and further, why it's a necessary thing for every portfolio.
And, if we look at some comparisons of gold and silver this year versus last year, gold last year was trading at $17.19. Now, remember, it had moved up significantly, and currently it's trading at $17.77. So that's only a 3.41% increase But I think you do have to look at it as that is the opportunity there. There is not, I want to go back to what I said in the first segment, which is when you look at the commodity sector and you see the incredible rise and what inflation is doing in that side of things, and then you look at gold and silver and you say, against the money supply, against the debts, gold and silver are so incredibly undervalued. I am not going to look the gift horse in the mouth here. I'm not going to sit there and say, well, I'm not going to buy it because it hasn't moved up like lumber did. You got to sit there and say, it's going to happen. We're very lucky that gold has not taken off as of yet, that silver has not taken off as of yet, that the banks, for whatever reason, are trying to, as they said, tamp down the price, right? They don't want it to get out of control because there's entities that if the market goes up, they're going to lose a lot of money. The banks are going to lose a lot of money. So they have a vested interest to stop it from rising, but therein lies the opportunity because they can't stop the inevitable rise. Other prices, silver is trading at just over $15 last year. Today, or this week, it was trading at 26. That's a 71% increase. Platinum, a 61% increase year over year from April to April. Palladium, 40% increase. And I believe you just mentioned, Jerry, off air that palladium hit a new high today.
New all-time high, that's right.
And the Dow is up 43%. So in actual fact, silver and platinum have outperformed the Dow so far year over year.
Those statistics are very, very encouraging, especially looking at gold, flat on the entire year, hugging 1776. That's a very key level.
Interesting year.
It's a very interesting year indeed, which means that we've been consolidating at 1776, a new floor, a new support level, and now you have silver still hovering highs. It's going to break out and we're going to see highs that we've never seen before. And how is that possible? We talked about it last week where you have banks rehypothecating and having shares to the tune of about 1,000 to 1. For every 1 ounce of silver, they have created 1,000 plus shares that people have bought. And now what they're trying to do is people want to take physical delivery. Well, they can't deliver. For now, this is sand through the hourglass. They're running out of time. And when this happens, when that catalyst hits, this precious metals, the lag in silver that we're seeing versus everything else will all make sense.
Yeah, I think as far as the sand through the hourglass that we're discussing is also a race between like what we're seeing as this tamping down on freedom versus what the globalists are after, which is trying to get everyone onto like a single currency. And how do you get rid of these debts? And you have to move over to a new system, right? Because the central banks, they've run their course. They're no longer effective.
No.
They're no longer working. The debts have gone too far. You have to reset the game somehow, and that was why it was so odd when out of the blue it's like, well, where's the war? And they're talking about the Great Reset and Build Back Better and all of these things, and it's like, well, you were the ones who tamped us down. Like you were the ones who stopped businesses, right? Now all of a sudden you're telling us we need a new currency system or something new. Yeah, we do need something new, but we don't need you to create it for us. You know, it's kind of one of these things where I'm noticing in conversations as well, Jerry. It's like you look at people talking about every day, every news station, okay, on AM, not just AM 640, all of them, they're all talking about how ineffective the government has been with regard to the pandemic. That they've just completely screwed it up.
Yeah.
Right. There's, you know, and maybe that's just how it's supposed to be. You know, we all complain about how you handled it, and you say, okay, well, you try being in my shoes, etc. But at the end of the day, you sit there and you say you've mishandled it so poorly, right? How are we supposed to trust you with the economy? That's what I wonder.
Yeah.
I say the faith in the government on this is completely out the window. People can't wait to vote someone else in, right? If they had some good candidates. But on the other side, it's like, but you're also controlling the economy side of this. And if this is how you handled the pandemic, how are you handling the economy? And you see it. We talked about it. The fact that the government has printed $600 billion plus versus of debt, more than the entire history of Canada. The Liberal government has done this. And you said, we're going to lower the debts a little bit. We're going to slow this down a little bit from 4 billion to 3 billion. How do you like that?
Oh, we're doing so
It's
good.
craziness. This is craziness, and you have to start protecting yourself. I don't think this is a time to sit there and say, I trust the government.
No, I'm not seeing that at all. It's either you're starting to prepare. I have seen countless individuals in the past month and a half leave the country. Just, I've had enough. I'm moving to Mexico. I'm moving to the States. I'm moving here or there. This is another trend that we're seeing, which is quite alarming, but can we blame them?
No, I mean, you saw it in sort of the blue states, right? Like people leaving California in masses,
In New York.
right? And New York in masses because they want to go places where freedom's allowed, where there's no vaccine passports or whatever it is. Now we have to eventually address the monetary issues. And I think that's the other thing. People are talking about, I can't wait for things to get back to normal. I just want things to get back to normal. I'm going to go get the vaccine because I want things to get back to normal. And you sit there and you say, where's normal after this? Look at all the debt that they've created. There is no normal after this. We're going to look like Greece after this. Remember what Greece looked like? Do you remember the riots in the streets because of Greece, because of the austerity plans? This is going to look like the Arab Spring when inflation happened in food prices and it went up and people snapped because they said, that's it. You know, every person listening to the show, I want you to think right now, what is your limit on how much you will pay for an avocado? Is it $6? Is it $10? What about when it's $15? You know, the people who are making millions and millions of dollars and getting their bonuses at the banks, whether or not your business stayed afloat or not, they don't care.
They don't care.
They don't care. If you're making, $600,000-$700,000 a year, you don't care. You're handling it, unless you're over your head and you've got way too many private schools to pay for. But besides that, you can handle a little bit of inflation. But this inflation has happened over the years. In 2005, you didn't care. You didn't notice 3-4%.
No.
But it happened over a decade. And then all of a sudden you said, I need to be earning an extra 30-40% between 2005 and 2015. But you didn't get a raise of 40%.
No.
You got a raise of 20%.
That's right. Wages stayed down.
And then now it's another 6 years later, and you're sitting there saying, and now the prices have gone up. Food, gas, everything, and I'm sitting there saying, well, did I get another 30% raise? Because that's what I need now. I need an additional 30%.
No, I'm now working 12-hour days.
Now I'm getting an Uber job just to keep things going. Is that what this was supposed to be about? Is that how our lives should end up being? Why? To pay off the debt for the government? I mean, at some point, something's going to give. And that's why we feel so strongly in gold and silver. The gut check on gold and silver has always been that. Sometimes the market doesn't move and you go, okay, is this ever going to move? You have a gut check and you go, gold and silver are finite. They are real money. They've been money for thousands of years. You could dig up an ounce of gold from 2,000 years ago and melt it down, and it's exactly as it was. In fact, it barely needs shining up once you pull it out of the ground when they find coins in Syria or whatever it is, right? And you say, yeah, it's always had value. Now, we don't know what the future is going to look like, but when you have a past like that, when you have a track record like that, you say, there's a reason why they made that money over 2,000 years. I'm going to put some of my wealth into that.
And people are definitely putting their money into that. The World Gold Council came out with their 2021 Global Trends Report for Q1. And in the next segment, Jeremy, we're going to be talking about more trends. The World Gold Council came out with the gold demand trends for the first quarter of 2021. And we're just seeing, there's reasons for people buying and entities buying gold, and we'll get into that more further.
The number 18778-SILVER, the website guildhallwealth.com. It's The Real Money Show on Global News Radio, 640 Toronto. Special guest joining us today, Jerry, if you can believe it, Paul Wiseman. How you doing, Paul?
Good. I'm finally here to do a show.
Yeah. So let's get you quickly caught up on what we've been discussing today. We've been discussing the fact that, okay, number one, the Trudeau government has printed over $600 billion, which is all of the money that's ever been printed in Canadian history, they've just doubled it.
Oh, my grandkids are going to pay for it.
And your great grandkids are going to pay for it. So we talked about that. We also talked about commodities going up, that we've seen lumber go up 300%, copper's up 100%. Gold and silver remain undervalued, but we have to remember they're part of the commodities super cycle. These things are going to take off even with the higher premiums. Let's be real. This is a great time to get involved because you don't want to be buying gold at $6,000 an ounce and paying a higher premium, because the higher premiums aren't going to go away at those levels, although there will be more buyers at those levels, I'm sure. So that's another thing we were talking about. What we did want to talk about before, Jerry's got a great article we want to just quickly discuss, and then we want to talk about the Silver Squeeze 2.0. So let's jump into it. Jerry, you brought an interesting article about what's happening with the ETFs. Speaking of getting into the physical market.
Absolutely. So it's a little bit more of a continuation on the trends, and we have to follow the trends. So the World Gold Council came out with their gold outlook for 2021, and despite the uncertainties, gold and silver remain very, very positive. What was very interesting, some key takeaways from the report was the ETFs. Outflows reached about 178 tons.
That's the gold and silver ETFs?
Yeah, the shares.
Okay.
People are leaving the share markets. However, offset, so it's dragging the prices down a little bit, but it's being offset by physical gold and silver demand for coins and bars. So despite the ETF outflows, you have really huge demand on the physical. Not only that, central banks have bought a healthy 95 tons in Q1. Turkey, Hungary, Russia, all doubling down, minus the Bank of Canada, of course. So the trends are definitely our friend, a continuation of last week.
Yeah, when it comes to stocks, you can always issue more stock. When it comes to cryptos, you can always just buy in smaller and smaller fractions. But when it comes to actual physical metal, there's a finite amount. You can only buy, when it comes to gold, you can only buy a gram, and there's 31 grams in an ounce. So that leaves you with 1/31th of an ounce that you can buy. That's it. That's the limit. After that, that's it. You can't get into the market. You are squeezed out of the market. And I feel like that's going to be an eventuality in this market as well. The price of gold is going to go so high that you're not going to be able to buy a full ounce. Okay, you'll be able to get a half an ounce. At that point, you might be able to get down to 10 grams, 5 grams. What do you think,
I don't
Paul?
know whether you kind of spoke about the mining companies, some of the large miners of gold and silver, especially the silver producers. They're holding back on inventory. Whatever they bring out of the ground, they're keeping quite a lot back and giving a small amount to the refineries. That's why there's a shortage. Why would the miners know that if silver's trading at $26 an ounce US, why would they sell it at 26 when they probably know by the end of the year it's going to be $35 and probably $50 the following year? Everything is being hyped up. And I spoke about this a month ago. Everything's on fire. Cryptocurrency's on fire. Real estate's on fire. The stock market's on fire. All fires get put out eventually. The biggest forest fire in Australia last year eventually got put out. It ruins a few people, it ruins some lumber, but it gets put out. And it's going to happen. Inflation is out there. I mean, the government keeps on telling us inflation is maybe 2.2%. I don't know what they're talking about. I watched something last night about the price of groceries. It's, gone crazy. You talked about lumber. Lumber's doubled. The price of houses are going up because the cost of lumber. Copper has gone from $2 to $4. It's going to, you want copper piping, you're going to pay more for that. Insurance has gone up like crazy.
And you mentioned mining, which means with all of these increases, inflation on commodities, etc., gas prices, the cost to mine is going to go up as well. So all of these things feed into the fact that the only thing that gets more supply to start lowering the price on this is pulling stuff out of the ground with blood, sweat, and tears. And if that's getting more and more expensive like everything else, then you also know the price is rising. Plus, obviously, the premiums are still super high on the metals. So the only way that gets reconciled is with higher prices.
Yesterday afternoon, we had a conference call, Jeremy, with our largest supplier, with the CEO, the CFO, all the vice presidents, because we are kind of concerned a little bit because we just can't get enough product to fill our orders, especially on registered accounts. We have product at Guildhall we're showing on our e-store. We have it. We're filling every order as it comes out. But you know, for our registered accounts, the product has to go in the account within 10 days, and there's just not enough product to fill the orders that we have and the orders that are out there.
And yet the price is low.
Well, the price is low because it's manipulated, and let's tell everybody that it is manipulated because they don't want the price to go up. You know, everything right now is let's keep interest rates low. That way, you know, people can make money. They can use their houses as ATM machines, and it's going to go up. My opinion, you know, people are making a lot of money in real estate. Eventually, the government is going to say, you know what, it's been tax-free for a long time. Whatever you made profit when you sold your house, guess what? You've made a lot of money. We gave you really low interest rates. Now we're going to grab it back.
Yeah.
And they're going to grab it back because there's no other way to get the money. They're going to put HST up. HST is 13%. I believe it will go to 15%.
Or they'll come up with a different tax, like the carbon tax.
They're going to tax something. I mean, you know, it's the same thing on registered accounts. It's the same thing. What's happening in the States, I mean, they're already talking about raising corporate tax. They had a break. They said, well, only the wealthy, only the big companies made money. It helped the economy greatly, and it was terrific. Now they're going to put up, you know, the corporate rate. Everything is going up. They want to do infrastructure in the States. The cost of doing infrastructure, which they should have done 12, 16, 20 years ago, is going to cost them 5 times as much.
Well, we didn't talk about that. The fact that the Biden administration, within 100 days, they've got 3 packages out with which is worth more than $6 trillion. 100 days, $6 trillion they're ready to spend. That is absolute craziness. Let's talk about Silver Squeeze 2.0 in the next segment. The number 18778 the website guildhallwealth.com. We'll be right back. It's the Real Money Show on Global News Radio 640 Toronto. Welcome back to the Real Money Show. The number 18778 the website guildhallwealth.com. Paul, we were just talking about Biden, his administration, 100 days. They've already got 3 packages ready to go worth $6 trillion of government printing of money.
Well, you know, it's crazy. I mean, it's just, if you had a printing press, you'd go to jail. These governments are printing money. In actual fact, all they're doing is diluting the dollar. I mean, they're confiscating people's wealth. The rich are getting richer because of low interest rates. You know, they can buy stocks, they can buy real estate, they can do whatever. The average person that I know can't buy Amazon stock. You know, say to the average person, how many shares of Amazon you got at $3,000?
Yeah.
That's US, not Canadian.
Yeah, unless they bought it in 1999.
Yeah.
So let's talk about the Silver Squeeze. So, you know, Silver Squeeze 1.0, we'll call it now, was a frontal assault on the retail market and getting into ETFs, etc. The idea was, let's do what we did with GameStop. Let's push the price up. Let's bring it to them straight on. And I'm kind of looking at this in retrospect, and I'm thinking, wow, it's like I envision, you know, those medieval wars where they try to take a castle, but just like, let's charge it and like do our best to. And you know, the banks are bigger than that. But let's go around the table here. Silver Squeeze 2.0, May Day. It's here. If you're listening to the show, we recorded on Friday. Perhaps you're listening on May 1st. What are your thoughts? Is this going to work?
Of course it's going to work. You got people waking up, like Paul said. The average investor, the average individual is not receiving theirs. It's the rich that are getting richer. And Occupy Wall Street 2.0 is this silver squeeze. You can get a piece of silver. If everyone were to do that, it makes a huge impact on the 1,000 times shares per every 1 ounce of silver on the market. Plus, Paul also mentioned about the mints and the mines. They're not releasing. Actually, the former U.S. Mint Director Ed Moy just spoke to Kitco the other day, and they mentioned that the mints are running out of gold, that there's not enough physical silver to cover the paper. So we're all questioning, how are the premiums going to go back to normal? Well, it's not. He says one of the main reasons for spot prices that have not caught up to the gold and silver premium adjusted price is that the overall markets are flooded with bullion derivatives. But he said, but it's only a matter of time before the short contracts keeping the price down expire. So this is a matter of time, and the more we take our physical silver out, the charade ends.
Paul, Silver Squeeze 2.0.
Yeah,
what did you make of Silver Squeeze 1.0?
You know, silver shot up. I mean, back in March of last year, March of 2020, silver got smashed down to $11.60.
Yeah.
You know, overnight, basically. It went up as high as, what, $29.50, $30 in that range?
Yeah.
When the silver squeeze, the last silver squeeze, we went from like $24 to $29.50, $30 very quickly, a couple of days.
Yeah.
The problem is, you have to pay for the physical product. It's if you're buying futures or options or whatever, you're putting the tiniest amount of money down. When you're buying physical product, you have to pay for it in full. There's not financing. You can't put 10% down. You have to pay for it. That's why we offer you can take it home, go to our e-store. We only put up on our e-store, by the way, what we have in stock. What's the point of putting 40 different SKUs of gold when all you've got is gold maples and 1 ounce gold RCM bars and gold Pamp Fortunas? You don't need 37 other items that says out of stock, give me a call, 10 to 20, 30-day delivery. The same thing with silver. We have 100-ounce RCM bars for sale. We have 100-ounce silver Pamp Swiss bars, which I love to death. We have 10-ounce silver bars and kilo silver bars, and everybody's favorite, the silver maple.
Now, again, do you think Silver Squeeze 2.0 is going to
It's probably going to happen, and I think you're going to probably see a 30 to 40% increase. I think you're going to see silver at $35. My crystal ball's a little foggy now. I'm not going to say it's going to happen Monday afternoon,
right?
But silver's going to go to $35, especially with the FX. The Canadian dollar is trading around about 122, 123. It's come off from a high. I bought last month at 1.27. I was paying to buy
remember
US
it at
dollars.
1.35 at one point.
It's dropped 4%. You're going to see gold and silver go up. Gold and silver, you have to understand, is your insurance policy. If you own your own home, great, you've done well. It's gone up in value. If you've got some stocks, you've got some, cash, you've done extremely well, but you need to insure the stock market right now. It's at an all-time high. Mm-hmm. What happens if it collapses 30, 40%? You're not quick enough to get the money out. You're not quick enough to sell. The insiders have already sold, and it's the last one in is the first one to get hurt. Yeah,
I liked what Peter Grandich said in an interview recently. He said something to the effect of, he's been in the business for 38 years, and he's never seen the ending of the movie and the middle class lived happily ever after. No, they're the last to know. I just believe you need to own anywhere from 10, 15, 20% of a hard asset like gold and silver in your portfolio. Salenti said, he always says, gold is for your golden years. You buy gold, you put it away. For the last 15 years, it's averaged 10% increase. Even, in a bad year there or whatever we had, it's still up 10% a year. Silver is a little bit more, I should say, turbulent. It has its ups and downs, but the market has been kept down. But you've got to remember, silver is not only a precious metal, it's an industrial metal. And with solar power, this green thing in the States that they want, and they're pushing it, silver is going to start going through the roof. Gold is also going to go through the roof. You need to buy it, whether you buy it, take it home, whether you buy it, put it in one of our depositories, which is safe, secure, allocated, segregated to you, or put it in a registered account. TFSA, if you've never owned a TFSA, that's a tax-free savings account. Whatever you make, you get to keep. You're not paying a nickel in tax on it. It's the biggest head fake that the price of silver has not taken off yet. Although it is up 40%, so anyone who's been in the market for several years can take a sigh of relief and say, I don't have to bite my nails as much because I've reached a new level. But it's the next levels that are going to be really exciting. When silver eventually breaks into the triple digits, I think that's where it's going to be incredible. Last thoughts, Jerry?
Well, you have when we're surrounded by just many bubbles. We have a bubble in real estate, bubble in the crypto space. We have bubbles in the stock markets. We're surrounded. Once that catalyst hit, once that bubble, gets pricked, watch out for gold and silver where the stage is set. And the point is, you can't, you need to buy it now. It's better to be 1 month too early than 1 day too late.
You need to get it now.
The number 18778-SILVER, the website guildhallwealth.com. Gentlemen, thanks for joining me today on the show. Paul, great to have you back. 18778-SILVER, the website guildhallwealth.com. You've been listening to The Real Money Show on Global News Radio, 640 Toronto. We'll talk to you next week.